Hello, everyone. This is Alexander Horat, your host with the Free American Press. Today, we're joined by Vladislav Gerbarski, founder of the Wealth Building Blueprint, a seasoned voice in the investing in macroeconomic space. Hello, Vladislav. Thank you for coming on the show.
Alexander, very happy to be here and thank you so much for having me on.
Yeah. So, after interviewing dozens of economists, macro analysts, and financial experts, what patterns are you seeing? What are we actually moving toward?
It's a very broad question. Okay, so the way I sort of look at things, we need to know where we are right now, and then we can look at where the world is moving. And then I usually like to base my investments by looking at these two things. So I'll start, by looking at the big picture. So on the macro side, I think it's important to understand the structure of the monetary system. So, right now, the currency, the US dollar, whatever, is not backed up by absolutely anything tangible. So the way it used to be, if you were a farmer, you would produce rice, another farmer produce barley. If you want to have barley, you would swap, so you have both commodities. Then they came up with medium of exchange, which used to be, shells at one time. Then they used coins and things like that. Then Chinese in the 13th century came up with what they called flying money at the time, which was actually the paper structure. So you would bring your gold, which was a representation of your productivity to the bank. Well, something similar to a bank. And then they would give you this note and you can travel with it. It was much safer. And then Marco Polo, I believe in the 13th century, moved that concept to Europe. So the reason I'm saying all these things is because we need to understand that money is nothing more than a representation of your productivity, right? So you're productive, you do something useful, and then money should represent that. Unfortunately, in today's world, that's not really how things work because the currency is not backed up by anything tangible, anything physical. Some say it's from 1913, some say from 1971, when the Nixon removed dollar from the gold standard. It doesn't really matter. I think it's just important to understand that currency should be viewed sort of as a hot potato. It is something that we have to use as a representation of your productivity, but you better convert it into something tangible that cannot be printed because if you don't do that, well, then you will lose that value and pretty quick. And we know all about the currency collapses. I'm originally from Ukraine, so I would know a lot about that when Soviet Union collapsed. And, a lot of people lost all of their savings just like that, which is not a nice experience, I'm sure. So yes, basically that's the whole idea. The way I sort of see money is you convert it into tangible things, and we can talk about some of those things, or you use it as an option premium, like Rick Rue likes to say, so that in case we have 2008 style of event, you have that dry powder to buy these cheap assets when everyone is panicking, when we have so-called blood on the street and things like that. So that's sort of how I look from this perspective. Then, if you look at the world where the world is moving, like I will let you, ask whatever you want to ask, but there's different assets we can focus on that could perform well in this environment.
Yeah, I definitely understand. So, what do you think are some good assets to transfer your money into?
Um, so, for many years, Alexander, I would focus on something that was, in my opinion, dirt cheap, which was gold and silver. For many reasons, if you look historically, silver didn't reach its previous peak from 1980s until just very recently. Gold was pretty cheap as well, so that's what I have been buying for many years. Physical and of course mining stocks as leverage, but that requires more effort and expertise, I suppose. So right now the situation changed a little bit because we had this parabolic move. And there's different perspectives. So as you mentioned, I have my YouTube channel as well where I do a lot of interviews and I have different opinions. So some people believe this parabolic move is just the first part of a larger parabolic move. Then I would talk to other people who believe that, well, gold is actually finished for a few years from here because we had the parabolic move, it likely peaked, and yeah, so my opinion is if you look at the big picture, yes, we have central banks that are on our side, so they're buying gold, so that's good. we have the structure of the monetary system that's, I've sort of mentioned that already, that's bullish for gold. But I do think, Alexander, that we need to respect this huge move, which, gold moves from an asset where it was a great speculation to where it is no longer great speculation because the risk to reward definitely changed. That does not mean that it cannot go higher, but simply from that perspective, it's not as good as it used to be, I suppose. So I personally, I did not sell my physical gold or silver, but I did definitely took profits in the miners. Pretty much maybe sold about 30% of what I had. So took all my initial investments, paid taxes and things like that. But yes, that my position pretty much tells you that I do believe that there are more possible upsides in those sectors. But I think, Alexander, if I could just mention mining stocks as well, what's interesting, so we talked about, great speculations. I think there's still a chance that mining stocks could be great speculation simply because if you look at, well, their current valuations, top high quality producers, they actually look quite cheap at the current commodity price, meaning that if you own physical metal, let's say you buy it today, you need the price to go higher in order for you to make money, right? But on
Yeah.
these mining stocks, the commodity price can stay flat or even slightly lower, but likely there will be this re-ranking when the financial reports come in, when investors realize that, okay, so the price of gold and silver are not dropping quick like we expected, after this big run. There's probably some new floor stability. So I think that's a very interesting possibility from the speculation perspective, which is exactly why I'm now very much focused on these high quality gold and silver producers. I actually took most of my profits in these junior companies, which again, if gold has another big run, they will likely do the best. But from risk to reward perspective, I just prefer those high quality producers. I think they look better from the fundamental perspective. So that's my use in precious metals. I'm a big fan of uranium. I think it's if we believe that the world will go to where we want it to go, where it's more prosperous, it's more inclusive, with countries like Africa having more electricity and things like that. Well, we simply need more energy, right? And because we are in more, I suppose, deglobalized world now, where we can see wars, countries trust each other less, and that actually the proof of that is the fact that central banks are buying more and more gold, because they wouldn't be buying gold if they would expect the world to be very calm and safe in the future. So from that perspective, we have risks in different markets, and we just seen with the Iran war, we have huge possible disruption for oil. Uh, so uranium, for me, is a very important part of that future that we want to see. And that's why I'm still quite bullish on it over the long term. Now, uranium had a big run. Like I started buying it, I think 2019, 2020-ish. It was maybe $20 per pound. Now it's around 80, 90, 70, and around that area. Uranium is an interesting one because you have the spot market and you have the long-term market, where most of the important transactions actually happen on the long-term market. So it means that you can sort of predict future uranium price, because those contracts, the price that they use to make these contracts with utility companies, things like that, sort of already show us the demand for that future uranium. But of course, the big risk will be nuclear accident. And now we have war in Iran. We have a lot of reports about, possible strikes on nuclear objects, which is not good, of course. So, we just have to wait and see. There's definitely risk, but I think for the reasons I've just mentioned, uranium still looks quite attractive. I like copper, of course, as well. If copper is used in absolutely everything, and it's part, again, if we want Africa to be included, if we want it to be more prosperous and things like that, we need more copper. It's used in various industries. We did not have any big copper discoveries for many, many years. And there is, like, the supply and demand for the metals does not look great for copper demand. Of course, that could change with new technology, But as of now, Alexander, I think copper looks quite attractive. It did have a big run, so normal volatility, I would expect, price to pull down. That would be normal. But over the long term, I'm still very optimistic about copper price. These are sort of the main ones that I have on my mind so far.
Yeah, so uranium, it sounds like you did well from $20 to $80. That's definitely some big upside and you're saying it may be going higher. So I just want to get your thoughts on this. People can't invest in physical uranium, like they can't ha hold it in their house, of course, because it has radiation. So I was just wanting to see what stocks do you think were a good play for the uranium market?
Sure. So we have the biggest, we have Cameco, of course we have Kazatomprom as well, but I think there's political situation. They had some recent problems. I think Cameco was if uranium becomes more important and more mainstream, I think those big funds and companies, if they ever do get involved in this sector, they will look for the biggest and the best. So Cameco will be the first in the list. And we've exactly seen that over the past few years where Cameco did really well. I think Denison Mines is one of my favorite companies. I think a lot depends on whether they can use this in situ recovery technology, which has been around for a while, but it's all about can they make it economic in the location where they're drilling. If they can, I think that's going to be automatic re-ranking for the company, and the company will do really well. And I talk with people like Greg Rule, Justin Hugh on this topic, and they do believe that there is a good probability that maybe they will. It will work. So I like that company. Next Gen, of course, they're one of the, they have very good location. There's still work to be done there, but that looks quite interesting. Paladin is another name that's on my mind. So yeah, these will sort of be the main companies. There's few mistakes I made in this sector as well. I bought Peninsula Energy, and people who know they know that that company had problems recently. But yeah, I think the sector looks very interesting, and I think one of the not worries, but one of the potential risks for me, I was thinking so Sprott Physical Uranium Trust, and they obviously own a lot of uranium. So one of the risks would be if those pounds could go back into the market. But then, if you think about it, and I was talking about that with a few of my guests on my channel as well. So first of all, they would need to pay a huge premium in order for shareholders to agree to sell that uranium. And there's probably have to be voting and big process for that to occur. I don't think the mechanism exists as of now to make that real. But if that does happen and they buy those pounds at a premium, well, that will be a signal to the market that there's not enough uranium. So that will actually increase the uranium price, if you know what I mean. Even though those pounds would come back into the market, there'll probably be a single large buyer, maybe a few buyers get together, but that would be actually a signal that, okay, so if they have to do that, then there is not enough uranium on the market. So that's actually a good sign. So I don't think that's a big issue in uranium.
Yeah, so one thing that I saw here in California where I'm at is the governor was actually wanting to decommission the nuclear power plant, but they decided to keep it going. So do you think it seemed like the whole world was wanting to like get rid of nuclear, like from that Fukushima thing that happened and other disasters, but you think the trend is upward, they're going to be building a lot more nuclear power plants.
Well, I believe there are about 75 nuclear reactors under construction as of now.
Okay.
And they are planning, a lot more in China from what I have heard. So I think, countries like China, like India, maybe I call them a little bit smarter than Europe because for example, in Germany, they actually done the complete opposite, which doesn't make sense because they were dependent on Russian oil. They don't want to be dependent on Russian oil, and now they, instead of being actually energetically independent, they're doing exactly opposite. So that doesn't make sense to me at all. But yes, I think countries like China, US, India, they're likely going to be bullish pro uranium. No, I think with uranium, Alexander, I don't think this is like a 15, 20-year story, like possibly with copper.
Mm.
I think it's a shorter story because we have enough uranium on the planet. It's just about having the right incentive to get people to produce enough. I don't think we are at that point right now because even though price went to 80, we don't have too many new discoveries, too many new projects. So I just think that it will take time, but I think we just need to look at the supply and demand fundamentals. There will be a point when the supply will catch up because of the higher prices, and I will certainly try to get out before that happens.
So what's your price target like uranium? How much does physical uranium have to hit when you're gonna sell your stuff?
So that's difficult to say because we don't exactly know what's the incentive price, right? We will find out when we see all these projects being developed. But by looking at the technical charts, I follow, Stu Penny, silver chartist. He's predicting, I think, $140 per pound at least. I will definitely get out before that, if that does occur, because I don't like to get married to a certain investment. With gold and silver, I am little bit just because there's no alternatives to money, something that is safe and you can store your wealth in it. But with other assets, um, once I get the returns that are objectively good, I don't mind leaving something on the table and get out because there's always a new investment, Alexander. It's you never need to, try to find the exact top. First of all, the probability of anyone doing that is extremely low, so that's working against you. But yeah, I just don't think there's a point in doing that. And I think we will know if the price goes up, if the miners explode, if everyone is happy and bullish about uranium, that's probably when I will completely got out. And by the way, I did take some profits already. So since the time period when I was building my initial position, let's say in 2020, 2021, I probably have like 60 to 50% left.
Oh, that makes sense. So how do you feel about the company Uranium Royalty?
Uranium royalty. So I don't really know too much about it, but I do. I was listening to a guy, Stock Monkey, I think, and he is very, bullish on that company.
Mm.
He likes it a lot. He believes it's one of the few companies that are still relatively undervalued compared to its, well, true price at, let's say, at 3,500 gold, like $3,500 per ounce of gold. That's the price he uses. So from that perspective, I do trust his judgment on that, but I didn't really do too much of my own analysis on it.
Okay. So for the silver miners, you said you're still in some of them. So which ones do you like out of all the silver miners? Like there's some that are cheaper, of course, then there's bigger companies like First Majestic. But which ones are you betting on?
Yep. So I like royalty companies, I like producers, and I like some mid-tier royalty companies like Vox Royalty, for example. So if we're talking about silver producers, Pan American, it's a very good producer. They have very different projects. They have good upside on the silver price, so they will be one. It's basically the companies that can give us good leverage and that don't have huge multiples yet. If we're talking about cash flow, so Newmont, you know, even Agnico, Pan American. What would be some of the other ones? These are sort of the ones that come to my mind right now. And yes, royalty companies, of course, even Wheatons, even Francos. I think if you want to be involved in this sector, they they would be must own for that exact reason. Because if once those financial reports come out and generalists or funds get more interested, they will buy big producers. They will not buy these junior companies who, don't own any silver or gold. They will actually go into these big high quality producers. That doesn't mean that those juniors will not go higher, but I want, from a speculative or risk to reward perspective, I think those would just focus on the high quality producers, in my opinion, in pretty much whole commodity sector. Because look, even if you look at copper, there, there are a few good copper plays that are there. Now, I don't personally invest in it right now because I feel like it's difficult to know if we are going to go into recession or if it's going to be inflation environment. We can talk about that, but that's no, that's a different story. But even big companies like, BHP, Rio Tinto, they pay very good dividends. They could be again under pressure if we have some slowdown, and they have a lot of income from iron, which is not, probably will not do that well in the near future. But if you want something big, something safe, something that pays dividends, they're good examples as well. That's pretty much my focus as of now.
Yeah, that makes sense. Moving on to oil, we recently saw the war with Iran start. I'm not sure how big that's going to become the war. Hopefully, not too much bigger than it already has been. But do you think we could see? Do you think there's a good chance of $120 oil?
Yes, there is a good chance if they close the Strait of Hormuz, if the war escalates, then that's very, very possible. We just seen headlines of, European gas getting pretty much 50% more expensive or even more in one day on the futures markets. So that risk is certainly there. The other thing is, though, if we do get as how do I phrase this? I suppose if the war does not escalate and sort of slows down and they come to some sort of an agreement, I think then this environment is not too bullish for oil because we do have some supply. China has been importing oil for pretty much building their reserves for a year now, so they have their supply. Mm, so I don't think short term from that, if you would have asked me this question before the war, I would say, well, I don't really see huge catalyst as of now.
Mm.
War, of course, is a big catalyst, so that could be a game changer. But I'm actually quite hesitant to say that oil is going to go to 120, 140, 200. They're going to, block the Strait of Hormuz. They will only allow the Russian ships to go through it, and Europe will freeze to death, and these sort of things. I don't really buy that. Plus, we're going into warm period in Europe and US, so demand naturally slows down a little bit. But yeah, I just honestly, it's very difficult to say. But over the long term, again, if you remember at the start, I was talking about this. We need more energy if for the data centers, for electrification, for everything that we talked about. And oil is definitely going to be a part of it. You're not going to power a factory with huge factory somewhere in the north with solar energy, right? Like it's just not going to happen in the near future, at least. So I think oil looks interesting. I don't think there are good opportunities right now in the companies. I think because the company has actually overperformed the actual commodity recently, so they've been seeing something, I suppose. But I also like to focus on the biggest and the best, so that's Exxon, Chevron, and things like that.
Yeah, those are dividend paying stocks. Do you like dividend stocks better than regular stocks or do you or not really?
It depends. I like to sort of, in my head, segregate my portfolio into different shelves. So I like to trade now and then. So I would have a trading portfolio because, I think psychologically you need to think about a dividend portfolio, a growth portfolio, let's say a mining portfolio, and a trading portfolio completely different. If you treat them the same, you will likely get in trouble because as a trader, you let's not talk about trading, but there's you need to think about it completely different. If you're thinking about dividend stocks, then you don't want the company, you don't need the company to grow aggressively. You just want a big company that's stable. They have, slow but steady growth, and they're going to pay dividends, and you know that your money is relatively safe in there. The example would be like Coca-Cola, for example. Coca-Cola is Coca-Cola. You know your money is relatively safe in there. And then if you're buying something like, a technology company, that's a completely different story. So I sort of segregate them, but to answer your question, I definitely do like them. I think though, to be fair, dividend paying companies are usually for older, richer people because once you have a lot of capital, let's say you have like 10 million, well then if you put few million into dividend company, that actually, if it pays 4, 5, 6%, you will get nice money out of that, right? But if you only have like 200, 300K, it's not really going to be life-changing money, even if you put all of that money into very good dividend company that pays, let's say, even 6, 7%. It's not really going to be big changes. So I think it also depends on your age. I'm still, relatively young, so I like to play more. I like my portfolio to be a little more aggressive, but I do also like to have, other beside companies like BHP, Rio Tinto. I think they're very, very solid too.
Yeah, I was wanting to ask you. I'm not sure if you're in the space, but I thought I'd ask you anyway. What do you think of the crypto markets? Is there any crypto coin that you like, or not really at this point?
So I was actually never involved in the crypto sector that much. I did own a little bit of Bitcoin now and then, but it was more as a trade, not as
Mm.
something that I would hold like I do with gold and silver. Now, Alexander, pretty much everyone I talked about right now admit that actually everyone that Bitcoin is in a bear market and it could go much lower from here because some people sort of see Bitcoin as a canary in a gold mine where it's very much dependent on liquidity. And because I was talking with Michael Howell, who's actually a liquidity expert, very interesting guy. Your audience should, check him out. He's very, very intelligent. And he was looking at liquidity, and liquidity is likely peaked right now. So, and Bitcoin is sensing that, which means that it could go much, much higher and that lower, but that could be an indicator and likely is an indicator for the general equities as well, because they are so stretched, so overvalued, if we use conventional metrics, that, this environment, Alexander, is very difficult environment for any investors because you don't have dirt cheap assets, or at least I don't see them like we did before. So we have gold and silver had parabolic runs. Copper, uranium are not, as attractive as they were before. Stock markets are at all-time highs, while we've seen some slowdown in the global economy. We have wars happening, we have destructions happening. Uh, it's just very difficult to navigate this environment, which I do believe that it's important to have a certain amount of cash on the sidelines as an option premium. I know uh, uh, I always get negative comments when guests in my interviews say something positive about cash, but I think cash is a necessity as a dry powder, at least some, maybe 10%. I think gold is still important to own. I will start selling my gold when I see central banks being net sellers for a while. I think that will be a big sign. Also, if you look at gold from 2011, that was the other huge peak, right? If gold, at the time, gold broke down against the stock market. Now it's breaking up against the stock market, which means that those environments are different from that perspective, but it also means there could be some weakness for stocks. And actually, during recessions, gold does quite well. It initially drops and then it performs quite well. So I think gold is still solid, but there are certainly risks to that. And then, I'm not a big fan of bonds. I just can't force myself to own something that, pays few percent, and while inflation is likely at least that or higher. Um, So yeah, it's a very difficult environment, but we already talked about some of possible good investment opportunities.
Yeah, so when you feel, I know you said you still had some gold and silver. So when you do decide to sell it, what do you think? Do you have an idea of what you're going to invest in next, or not at this point?
Uh, so I suppose once that happens, I would love to see copper cheap, uranium cheap, oil cheap, natural gas cheap. So I would actually love for a situation where gold goes higher. It sort of gives me more than I deserve, to the point where I'm like, right, I actually don't care if it goes much higher. I have to take some profits. And then those other assets are also relatively cheap, and then I could convert into them. But whether life will give me this opportunity, Alexander, I have no idea. And real estate market is interesting as well. If we get, it's very overvalued, but measured in gold, it's actually cheap, which is actually interesting. It's cheaper than it was in 1970s. But uh, I talked with Melody, right? And she believes that there are a lot of distressed sellers, people who believe that their house is worth a certain amount and they're not able to sell it for that price, so they just take their house off the market, and that could possibly accelerate in the future as well. But I suppose we'll just have to wait and see.
Yeah, so you said when you sell your gold, you'd hope copper and oil and uranium to be cheap. So I just wanted to ask you what you consider to be cheap, like how like what price is oil considered cheap, copper and uranium?
That's a very good question. I think, one of the indicators would be people are not interested in it. That's one. And you can sort of feel that, especially, as a content creator, I think you can see it as well, what people are interested in or not, by the comments, by the views, what they click in, what they watch, the retention graphs. I think that would be one of the small indicators. But other things, I think $40 oil is a good buy.
Okay.
Uh, I think copper is what I think below four would be a good buy.
Mm.
Um, Uranium below 60 would be definitely a good buy, I think. Uh, Gold, if gold goes to 4,000, I'll be a buyer, I think. Um, Above that, I'm not sure. Silver, if silver goes to 50, I'll be a big buyer. I think 50 will be big support. Um, yeah.
Yeah, that makes sense. I just wanted to mention, could you tell the viewers where they can find you?
Yes, thank you for the opportunity. So I have a channel called Well Building Blueprint, and my name. I do interviews with with a lot of experts like Rick Rule, Michael Howell, so many names I could have mentioned. Um, and yes, I release 3 videos every single week, at least three recently. So if you're interested, please follow my channel. If you are relatively new to investing, I have a course, Well Building Blueprint. I've spent the whole year creating that course. I put tremendous amount of effort into it. I have 100% money back guarantee, no questions asked. And yeah, if you're interested, follow that as well. And yes, Alexander, thank you so much for an opportunity to talk to your audience, and it was a pleasure.
Oh, no, I really appreciate you coming on the show and providing all this great insight on all the different markets. And I definitely think everyone needs to check out your YouTube channel and your X page and Instagram and definitely follow you there to get some more really great information. And just for my last question, is there anything else you'd like to add in this video?
No, I think we covered all the important things. I think it's just important for people to not be very much married to a certain view or a certain opinion. Gold can go to 10,000, absolutely, but it's not 100% guaranteed. Gold could crash back to, 3,000, but it's not guaranteed. I, of course, lean more towards the bullish to medium side, bullish to potentially flat. camp, but anything can be happen. So, I would just say I would say that people maybe should be a little bit open-minded as to what may or may not happen in the future.
I definitely agree with you. People do need to be open-minded because when you're closed-minded, then you can definitely make mistakes much more easier. Uh, well, I would just like to thank you, Vladislav, for coming on the show. And I would like to thank all the viewers for watching. If you could please subscribe to the channel and leave a like on the video, that would be great. And share it with all your friends so we can get the word out to as many people as possible. Thank you all for watching and hope you have a good day.